So we're talking just a little while after you raised a 60 million round for your company Venn, which is essentially trying to create more of a neighborhood vibe to these buildings. Did I get the premise correct?
Yeah, absolutely. So basically we started back in 2017 to build the neighborhood platform to connect neighbors to their neighbors and neighbor to their neighborhood, with the concept in mind, that with the understanding that the concept should inspire more and more developers, owners, municipalities to create better communities in neighborhoods. Now, we believe that neighborhood is the most important area.
Block of
It's much more important in the city and sometimes more than the country.
Sometimes people will not leave a particular neighborhood because that sort of your gym, your store, your friends, that's the important thing.
Yeah, this like everything happened in your neighborhood, right? And we realize that once you build thriving communities in neighborhood, it helps everybody to make also better businesses, right? The neighborhood is thriving, community is coming together, people are coming to the neighborhood to explore more opportunities, occupancy going high, turnover going down. And once you build this level of trust between landlords and tenants, you can increase revenues by adding additional services on top of the rent. So what we're trying to do is to redefine the category. We're trying to redefine rent by adding more value to those communities.
And what's the structure with landlords? You go to a landlord and say, I will decrease your turnover, increase your NOI. What's in it? Is it a fee-based system? How does it work on your end? How do you make money?
Yeah, so basically it's we spend more than $40 million so far on the technology side, and we're about to put another $60 million just on the technology side. So we are a very expensive product. We charge $35 on a per unit per month basis.
Okay.
But we promise the landlord that they're going to increase their NOI by more than $120 per unit per month. So after 18 months, if the landlord doesn't see at least the $100, they can terminate the agreement and they can say...
There's no money back agreement.
Of course, of course.
Okay.
So we guarantee that landlord going to make at least what they pay, and we have a lot of experience. So we already have more than 10,000 apartment units across the country.
From the bigger landlords? Or?
Yes, like 2,000 to 5,000, 10,000 apartment units per landlord. So we started in New York, and then we found ourselves in Kansas City, downtown LA, St. Louis. We're about to launch Chicago, Detroit, and we're looking for more and more partners in the United States.
And you're doing this at a time, obviously, you're a proptech startup, right? You're easily defined in that category. At a time when that category has just exploded. 5 years ago, the amount of funding that came in is now being done in a month. So how have you benefited from that? And how have you what's the risk of that? What's the risk of too much money flowing into the sector?
So I think in the past year, we've seen tremendous value being created by so many companies. By the way, a lot of proptech companies are being built there in Israel. A lot of money is coming to Israel. More than $3 billion was invested just in Israel in the past 18 months in proptech companies. And I think the reason is because this market is so huge, so big. If you think about it, there are more than 44 million apartment units for rent just in the United States. The turnover rate is more than 50%. A landlord will pay more than $100 billion in turnover cost year over year. So if you can add value, you can make better efficiencies, and landlord can make much more money with great technology.
Everyone talks about the TAM and this market just being unbelievable. I mean, it keeps growing over time as you integrate more services. So it's good to have you with us.
Thank you so much.
Thank you.